Kia ora. Okay, I'm going to work through this exercise. It's on cash flow exercise for McGinty. So on the first thing, the case study, they've given us a balance sheet. What is of use to me in this balance sheet is the bank account balance. All right, so I just need to locate that because that is what the bank account balance is. Nice to be able to colour that a bit, I think. So I will do that. Cool. So that's this cash position as the 31st of March. Okay, the template that they've provided, they want the cash flow statement for the month of April. Okay, so that's where they're putting the opening balance for the bank is the 1st of April down here. So that's the figure I need to pick up from there, because that was at the 31st of March. Right, so I know the starting cash position, which is useful. Right, then above it they've given me some information. Okay, and that is that they received cash from customers, so that's certainly something from operations. So that's an operating activity, and that I'm going to have in or out to help me as well. Okay, so cash from customers is an operating inflow of cash, so that's money in at 1,500. Okay, received $1,000 from accounts receivable. That's people who did owe us money at the beginning. That still was an operational type thing, presuming the invoices that they're paying are for sales, right? And it's not for something like a capital item that you've sold, right? So that is a presumption. Okay, right, so we're good with that. And that's money in as well. Work done on credit. Okay, so it's on credit, no money changes hand. Is that applicable? I'm going to put in A for not applicable. Cash sales, $1,200. It's another operational one, and that's 1,200. Okay. Cash drawings. Okay, so cash drawings are you taking money out. It's not an investment, it's not an operational thing, it's a financial thing. So capital, putting money in or taking money out, is a financial. That's the type of one it is. So we know that it's either going to be operational, financial, or investment. Investment is selling or buying assets, or NA, which is the other one here, which is, it's not in the cash flow statement. So cash drawings is money going out. Okay, that makes sense. Interest paid on bank loan, that's an operational expense. Okay, there is a choice actually within the standard, New Zealand standard around this, that interest expense and interest income and dividends could either go in the financial part of the cash flow forecast or in the operational. Okay, so there is a bit of, you can choose in that regard. Interest paid on the bank loan, I'm going to call it operational. Okay, and it's $200. And it's money not going in, it's money going out. Okay, just make sure I've got these right. Received, credit not applicable, sales received, drawings going out, interest paid is going out. Okay, other operating expenses, they've given us the answer, that's operating expenses, other operating expenses. Okay, so I think that should be paid, really, to make us really get the, because it should really stipulate that it actually was paid, not just invoiced. Motor vehicle recorded at book value, $1,200, sold for $13,000. So that's money going in for sure. It's money coming in, and it's coming in from an investment that was sold, right? Assets are investments. Okay, so that's I for investment, right? So these are my categories down here. Okay, purchased new stock on credit. Okay, NA, because it's not no cash. Okay, first rule, did cash change hands? Purchased new stock, the word's credit, no. Bank loan repaid, okay, so it's money going out. Money going out of 4,500, and that's a financial one, so it's a loan is a financial part. Paid at 1,500 to accounts payable. It's operational, and it's accounts payable, presuming the accounts payable is all for business expenses, all right? Not any invoices in there for, e.g. a laptop or something, okay? So out is 1,500. Okay, that's all good. Then we've got interest received on a long term, so we've received it. It's interest received. Okay, we'll keep it consistent since we're claiming putting interest paid into operational. We're going to put interest received into operation as well. Okay, money in $500. Okay, sold some investment assets for 5,000. Okay, so that's investments have given us the answer. It's money in and it's 5,000. Right. So that's that. Okay, so we've got those in. So these are my operational ones, which are the lion's share. Okay, there's operational, there's operational. Okay. Here's some more operational. Okay, here is some more operational. Okay, so those are my operational expenses. We know that the cash flow forecast is split into three sections: operational activities, investment activities, and financial activities. Right, so cash came in from, that's sales. That's sales. Okay. Okay. It's interest. Other operating expenses. Op expenses. Okay, accounts payable. Interest received. So that's interest received. Okay, so that's that. Okay, so cash came in from sales or customers, which is those top three there. That's the top three there. So if I choose that, it should give us that. Okay, 1, 2, 3.
It's 8 o'clock.
Okay. Right, I'm just having a look at the model answer, and they have chosen to put the interest in the it's interesting. We've got interest received in the investments and interest paid in the operational. So interest paid is operational, which is correct. Interest received, they have put in they've chosen to use the one where interest received is part of the investment. Okay, so they've invested, right, but you can put it in operational. I just want to get the right answer, the same as what's probably on the system, so we'll go that way around. So make sure I've got everything checked off. Sales. Then we have got no fill. Okay, cash goes out. Cash going out is interest paid. $500. It's 200. Double check. It's other operating expenses. Operating expenses. Okay. 1300. Okay, and then it is accounts payable. 1500. Okay, so those are our operating expenses. All right. Okay, you can either have them as negatives, which might be easier to put in formulas. There's money going out, right? And therefore the net cash activities will simply be the sum of these. Right, okay, so really that should add up to $700 positive, okay, from operations. Then we have a look at what's involved in the investments. So the investments are the ones I put an I in front of. Okay, so the I's are in I's, we'll give them a blue colour. There's another one, blue colour, NA, that's good. Right, so there's 3. Okay, and which ones are in? They're all coming in. That's pretty good. All right. Okay, so that's assets sold. Okay. It's money coming in, so that's positive, and it's 1300. Okay. It's interest received. Equals 500. Okay, and it is sold some investments. Investments sold. Okay, so there's no money going out. Okay, so that should be just the sum of this. Cool, which should be 1850, which is good. All right, getting close. You know, we've got how many financial? We've got drawings. Okay, orangey color, and we've got a bank loan repaid. Okay, so cash inflow from, cash outflow to. There's nothing coming in. Okay, bank loan. Let's go drawings first. Drawings is minus whatever we took out, minus 500. Then there was loan paid, money going out, minus 4,500. Okay, so that's the total amount of money going in and out is that, which is just negative. Alright, so at a quick glance I can see that it's actually going to end up positive anyway. Sometimes I like to format the currency, so it's currency, currency, and do it like that, so it's sort of, you can see the negatives. It's quite handy. All right, it's got a good presentation. Okay, so you can see that the money coming in, money coming out. Do that again, format, cells, currency, and choose that one. Okay, right. Somehow missed it, I think. We'll get back to that anyway. Right, doesn't like it. Okay, the net increase in cash held. Well, I've already said increase, so they must know that it's an increase. So it'll be the total of these three anyway. So that's how much it's gone up. That's what we started with, and that's what we should have at the end, is what we started with. Okay, equals that plus that. Hope it's going to, yep, 16,800. Cool, agrees with the model answer. So that's the answer to that, right? So that's a cash flow forecast, broken down into the three sections that we know about. Right, so we know that it's activities, we know it's investments, and we know it's financial activities, paying off loans, drawing down loans, money, putting money in, taking money out. Right, so that's a completed cash flow forecast.